Good morning, traders. I'm Nalnakshi Swami. Welcoming to my channel, Smart Index Edge. Today, I'm going to talk about the CISD trading concept. Before I dive into any charts, indicators, or fancy strategies, let me tell you something. The market has a rhythm. It breathes in, it breathes out, it tempts you, it traps, it surprises, and then it rewards. But only those who understand its sequence, its game plan, get to take a seat at the winner's table. Today, I'm going to walk you through a concept called CISD, that is compression, inducement, sweep, and disbursement. It is not just a theory, it's a roadmap of how smart money often operates in the market. If you have ever been stopped out right before a big move, or if you have ever entered too early and got caught in a trap, CIST will open your eyes to what is really happening behind those candlesticks. So once you start recognizing this trading concept, you will understand what has happened. Think of it like this: the market is a master storyteller. First, it builds suspense with compression. Why I'm making this video is because it is at the right context. On Thursday, the market was under tight compression. So it has built a suspense with compression. Price moves in a tight range, giving the illusion of calm. Then it teases you with inducement. So, inducement we can anticipate on Monday. Small tempting moves to make you take the bait. Definitely, it will do that. Then comes the sweep, a quick, sharp move to grab liquidity and catch traders off guard. Finally, the real plot twist: disbursement, the true directional move where profits are made, as happens in the market. Once you understand this CISD, you won't be reacting emotionally to every candle. You will be able to anticipate the storyline. So, if you know the storyline, what is playing around this, you will not be reacting. Position yourself with confidence. You will get positioning with confidence, and most importantly, stop falling into the traps that 90% of retail traders get caught in. In the next few slides, I'll break down each stage, show show you how it appears on the chart, and share tips to trade alongside this smart money instead of against it. Okay, friends, let us start now. The compression process, price gets squeezed into a tight range. That's what happened in on Thursday yesterday. It began its compression a day before on Wednesday itself, from the 1:30 p.m. to 2:30 p.m. till the closing. It was in a tight range. Indicates reduced volatility and energy buildup. You think there is a lot of energy built up in that. Traders await breakout in either direction. Compression. So I'm taking you to the chart here, what happened in the market. This is on 13th. 13th, there was a compression till 12:15 and the market moved higher. It was a bait actually. And then it compressed in a tight range, closing here around 24,619 or something. And later you can see throughout the day, entire day, the market compressed like anything. Neither it did not show any direction, so energy has been built up in this. So next step is after a compression, what will happen is the inducement will start in the market. Market tempts traders into early position, often creates false breakouts, collects liquidity from trapped traders. That is the thing, inducement. Suppose if the market starts moving downside, the traders immediately they will go short thinking that it is going to move there, it is going to collect liquidity from the trap traders. This is how the big money, big smart money, here you can see it will just pull the market little bit, price little bit up, and all these retailer traders are jumping into the buy. When they get, so what will happen? Another smart money, smart person is sitting at the back and he will pull the strings over here. He is pulling up. It is like the game between DIS and FIS. That's what I usually uh, compare it with. When I see the data, FIS bought this much amount and equal amount of DIS are buying, it is nothing but the same thing. They are sitting below the charts to trap the people. This is what this one may be compared to DI and FII. You can compare it. This is what happens after the inducement. The market starts moving in one direction. All of us will get into, and they will put a fish hook and liquidity grab will be there. All we will get. We are the trap people. We will enter into it. Many people, they will interlate and they will get trapped. So that's how it is. Liquidity sweep or stop and price moves beyond key level to grab orders. So there will be compression zone is there. Already compression zone has been built in Nifty between 24,600 and the high and the low. And yesterday it made a low of 24,596 to 94. It can sweep, either it can sweep the higher side liquidity or the downside liquidity. We need to see, they will show a bait. They will bait it and they will move in a different direction. That is the sweep. Liquidity sweep will be there because the range has been created in the market since Thursday, since Wednesday last hour and Thursday entire day. So there is lot of liquidity above and beneath, and you should not get trapped. So you need to wait for the move of the big money. What is his intention? To know the intention. If you wait patiently, you can do that. This is the sweep. They will do it after the compression. Sweep will happen. If you see the sweep, if it is going down, that way may be their intention to buy. Their strong buy will come and they will move. Disbursement will stop. So this is how it is. Here, stop this candle moving below and stop and price moves here. And with the late entry, people will get stopped out. And again, see, these are the sellers' money. Again, they trap this liquidity. And again, see, this is the stop loss hunt. Stop loss hunt is liquidity. This is how the market plays. You should know the game. When you know the game, so in the last true move begins after sweep. This repeats on and on, even on the lower time frame chart, 5-minute chart, 15 minutes chart, or hourly chart and daily chart. So even on the stocks, indices, it even on the commodity, this one, everywhere it is repeated. So if you start noticing this CISD concept, if you know this, this is the where the you will understand the game plan and you can trade better. The intention of the big smart money you will come to understand. So now from now onwards, start seeing the chart and what has happened in the market. Then in the disbursement phase only, you need to enter into the market. True move begins after the sweep. Price expands in intended direction. Intended direction means that is the intended direction of the smart money. Smart money, it is like a game actually. They will tie, see, you must be hide and seek game, you must be knowing all might have played. You will, somebody will tie cloth to your eyes and they will make you to rotate so that you cannot make out the direction. That is the intention to rotate. So you will lose the direction. You will be standing in one direction and you will be tied cloth. Then when you get rotated, then you become directionless. Then you will not be able to make out. That's what happens in the market. You will position yourself in one direction and the market behaves in another direction. Then you start thinking at the real time market play, your mind will not work. Psychology dominates, and you will start thinking, oh, the market is going down. If it is going up, you will start thinking, market is going up. Sudden movement will be there, and you will get trapped. So, you should not do that. If you start observing the chart, the price action, what is built on the chart, then you can plan your trade with patience. Smart money distributes positions into liquidity. They start uh, distributing positions. After the pump up, they will start distributing. Not, they will not start distributing in the consolidation price, tight consolidation. So they will do this. So if you know this, this is how after the sweep of the liquidity, how many times you might have seen after the price moving, sweeping this liquidity, the market price moving like a rocket, trapping all the traders. See, late entry, breakout traders will be there, and then stop loss traders will be there, buy stop orders, sell stop orders, everything will be swept into this game, and finally the market moves into the gust. Why? Because the big money has got problem. Big money has got problem, liquidity problem in the market. When they have liquidity problem in the market, they will not be having buyers, and they have to set a stage for grabbing the liquidity. They have to do that. So they have to, who are the players? We are the players. So they can play with our psychology, mental psychology, and they make us directionless. See, why we become directionless? Because there will be inducement. Inducement, they will do inducement to the downside or inducement to the upside. You will not be knowing at that time, yeah, when, and that's why intraday traders most of the time and they fail to recognize this and they will end up in losses, well, even though they will be right. For example, even in option premium or anything, we will think just a slip of your entry will cost you so much, and you will not be in that trade. So if you give minor importance and if you start marking all those levels, uh, I mean, observing those levels, what has happened in the market, what the story has cooked in, then you can plan your trade. Stay a little bit outside the game and see the play, and then you enter when the big money sweeps the liquidity. If you be with them, you can be in this rocket mode. Okay, friends, thank you very much. I felt this was the right context to make this I mean, this video, because that has happened in the market on Thursday. The market moved in a very, very tight range. Nothing happened. Both the call and put were written in the market. They were shorting the call options and put options. So there was no premium increase. Anybody who have entered might have ended up in losses. That's what I can feel that. Thank you very much, friends. Narnakshi Swami signing off. Please do subscribe to my channel to get more insights into the market behavior and action so that you will be aware of it.